Good morning, everyone, and welcome to the CIM Vancouver webinar. Today, we're delighted to have Christian Milau from Equinox Gold. He's the CEO, and it's going to be a conversation about creating the premier America's gold producer. Firstly, we just want to say a few words about the CIM Vancouver branch. We'll just also note that there was another webinar from CIM National today, so we have got some feedback, and we understand that there were people who wanted to go to both. We are working on a calendar with CIM National to ensure that we avoid future conflicts. We do apologise if people were hoping to see the other webinar at the same time, but we are thankful that you chose this one. We're just going to introduce a few of our sponsors. Let me just see if I can make my... Hang on, I'm just having a little glitch here. Here we go. We just want to do a quick pitch for CIM membership, both the national membership and CIM Vancouver membership. So just keep that in mind. If you become a member, you will get the CIM magazine and other interesting content. We also would like to make a call to action about the mentor program. Some of you have already been mentors. And if you'd like to join a mentor, there is a link on the CIM website, cim.org/mentorship. We encourage people to be mentors, particularly at times like now, where younger people coming through the industry really could use our support. You can stay connected with the CIM Vancouver branch through LinkedIn. That will help track relevant industry news and CI events, especially in this area, as well as advertising student employment opportunities. And if you are not yet a member, just go there and request to become a member. We'd like to just acknowledge our event sponsor, gold level sponsor, Bedrock Service, who have been a reliable sponsor for the CIM branch. So thank you to Bedrock Service. We'd also like to acknowledge AMC Consultants, who have a big presence here in Vancouver and are a sponsor of the branch. Silver sponsor Merit Consultants, thank you to Merit, and also Pan American Silver. So thank you also to SLR. And those are our sponsors. So now we will do an introduction for Christian. I should have also mentioned that this is Laurie Remai here talking. I'm the Vice Chair of the branch for CIM Vancouver. And I'd like to introduce Christian. So Christian Milau has been the CEO of Equinox Gold since August 2016. Prior to joining Equinox Gold, he was the CEO of True Gold until it was acquired by Endeavour Mining for approximately $240 million in April 2016. Before that, he held senior positions at Endeavour Mining, New Gold, BNP Paribas in London, and Deloitte. He brings more than 20 years of experience to the company, with expertise in finance and capital markets, as well as operational, government, and stakeholder relations expertise. He is currently a director of Northern Dynasty and Plateau Energy Metals. So we'd like to welcome Christian, but before we get started, we'll just have Sherwin, who is our moderator today, just quickly explain how we will submit questions and respond to questions as we go. And I'm going to stop sharing so that Christian can take over and set up his presentation. Thanks, Sherwin.
Thanks, Laurie. Thanks everybody for joining the presentation today. So what will happen is we'll have Christian go to the presentation, talk to us about the company, the projects, and the path forward. And what I will be doing is ask questions and also related questions that comes from the audience to Christian, so he can review and answer those questions as well. So if you have in your Zoom screen, you have an option on the bottom of your screen called chat. So you press on the chat, and basically you have a Zoom group chat. Type your questions, and I will see it at the bottom of my screen, and I will relay those questions. Well, without further ado, I would like to welcome Christian, taking the precious time out of his day to be here and present us with the project, with the company, and the path forward. And I think it's been one of the best days in the gold market and gold pricing. So without further ado, I would like to welcome Christian to the presentation. Thanks, Christian. Please go ahead.
Yeah, great. Thanks, Sherman. Thanks, Laurie, for the introduction. pleased to be here. I just want to check. Can you see my screen with the presentation slide? All right, good. Yeah, I thought it would be worthwhile just kind of running through a little bit about the company. I'll give you a little bit about my history and involvement with this, and then run through kind of what we've been doing. And there's been such a change in the business over the last 3 years. I started in 2016 in the summer. We'd sold True Gold to Endeavour, where I actually been involved. I'm historically a chartered accountant, investment banker, and looking for something to do. And mining obviously being one of the biggest sectors here in Vancouver, it was sort of one of the obvious choices. And got involved just before kind of that peak in the copper price. I remember $4 copper, and then everything collapsed. And I joined New Gold right at the summer, I think, of 2008. And we'd done the three-way merger. The share price, I think, was $10. Next thing you know, by year end, it was 86 cents. It was a heck of a up and down there within a few months time period. And it just feels like we've gone through a couple more of those since 2007-8 when that financial crisis hit. But I've really been involved with helping build companies from either a single asset up to 4, 5, 6 assets along the way. And I find that that's where my skill set's been, involved with taking something from kind of idea and concept of creating these mid-tier gold producers and trying to find private equity here in Vancouver. When they had an office here, Dan Wilton was here, and he was in Mark O'Day's office, and I was actually working there through the True Gold relationship. And we were looking at a few assets, looking for some backers, and we'd actually talked to them before more socially, and they just said, look, we own 50% of this asset in Brazil. It's a mine that went into production for 4 years. They actually didn't build a crusher. They didn't build a proper front end of the plant. What do you guys think you can do with this? We like the geology. It's a pretty sound, big property that it just needs recapitalization and the right team in there to put it back on its feet. And we went down to it, I think, for 3 days. It was right during the Olympics. So I remember we didn't need a visa to get into Brazil. And we stood on that property. I think it was 1,400 square kilometers at the time. And I know George knows it to a certain degree because Sandstorm is a big investor. And we just said, we're in West Africa, even though we're standing in Brazil. And obviously the geology is very similar. And we just fell in love with the project. So there is lots of gold here. And the head geologist was an ex-Anglo Gold geologist, a Brazilian guy who basically left Anglo Gold to join this bankrupt company because he just loved the property. And I said to him at the very end of the trip, when we kind of go, all right, we can refix, this rusty plant. We can find some money. The drilling's been done. We can get this going again. We'll find the people and the money. And I said to him, how much gold do you think's here? Just to give us an idea of, is there something beyond that sort of 6-7 year mine life, which is what we started with. And he said, look, I think there's 30 million ounces on this property. I said, okay, get us 3 to 5 and we can have a great project here. And that really was the incarnation of Equinox in the early days. And roughly within a year after that, the market had fallen, I guess it was after Denver Gold in 2016. It really came off, and raising capital was very difficult to do. And I think that's one of the secrets of building a company is having access to capital. And interestingly, we got introduced, and I sort of got to know Ross Beatty. He had a project in Brazil. It didn't pan out to be a large-scale project, so he was sort of looking to merge it in. It was Anfield at the time, in with another company, and I'd actually talked to him about it. I actually have a place in Bowen Island. He lives on Bowen Island, and he tends to take his bike and ride to work, and I do the same. And we ended up talking about Brazil and assets and gold and silver, and said we should do something together one day. And we sort of talked about the concept of combining our businesses, and he would become chairman and get behind this company. And we just said, look, the asset you have there in Brazil, it's a little bit small. It probably doesn't fit the strategy. And he said, look, I'm talking to someone else who has a good sized asset in the US. So Richard Wark, who was behind Newcastle and the Castle Mountain project in California there, said, look, if we do a 3-way merger here, you put in our nice project in Northeast Brazil, you put in the asset in California, which needs a bit of work and needs a bit more time to put back into production. And Ross will come in and be sort of part of the face of the organization and put his own capital in and really get behind this company. And we decided to rename it Equinox Gold at the time. And he said he just loved the name. It was the first company I think he created was Equinox Resources. So he said, look, I'll bookend my career. I want to build a gold mining company when the gold price is still $1,100, $1,200 an ounce, so that when the cycle does turn, and trust me, Ross and I had no idea gold was going to be almost $1,900 today. I would have guessed it would be in the $1,300 to $1,500 range if you look back 6 to 12 months ago. And we put the companies together in a 3-way merger and really took off from there. And because of that relationship, we've had the access to capital through Ross's personal balance sheet, through Richard Wark, through a few other groups like Lucas Lundin, who's been a good investor in our group, and then also the big banking groups that back most of these mining companies were also big followers and wanted to get behind a growth story, because I think the last 8 to 10 years in our space has been just terrible for access to capital, and really tough to build a company because you need that access to capital at the time. And those guys gave us that head start. So in late 2017, we renamed it Equinox Gold. We did the three-way merger, and then we launched into looking for assets. And along the way, we've added Mesquite in California, which is a couple hours down the road from our Castle Mountain mine. And then recently, obviously, we just closed the deal with Leah Gold to add another 3 producing mines in Brazil, 1 project in Brazil, and a big producing mine in Mexico. So within a 2.5-year period, we've been able to, got a little bit lucky, I think, with the gold cycle picking up so quickly. But we're able to access the capital and put a team and put the assets together where I think we have a platform now that has 6 producing mines. And I'll actually advance the slides now. Kind of jumped ahead here to slide number 3 there. So we've got the 6 producing mines, and we've got 4 growth projects with over 12 million ounces in reserves and almost 22 million ounces in resource. And this year alone, we'll be producing between 500,000 and 600,000 ounces at probably just below 1,000 ounces, $1,000 per ounce. So good mid-sized company. It's diversified now. It's got the good backers, which is now becoming much more institutionally focused. And we've got a runway towards 1 million ounces, which I'll discuss in a minute here, with our current internal projects, and they're fully funded, which is also something really nice at the moment. We do not need to raise any more money. And roughly our assets are split, if you look at that map, of about 1/3 in Western US, 1/3 in Mexico, and 1/3 in Brazil. Even though it's a different number of assets, roughly the reserves and resources are split fairly equally. And we found the investor universe has really appreciated having a decent scale company with some diversity, some risk mitigation, good mining jurisdictions, and a fully funded platform with some growth in it, which is starting to become an important piece to, I think, the mining stories at the moment. I'll just touch on COVID briefly here. It's so topical. Maybe I'll leave it more for questions, but just like us, just like others, we've been dealing with COVID here. Everyone went to a crisis mode in March there, where we've been working from home from the Vancouver office, basically from home for the last few months, slowly starting to go back. Our sites have adapted fairly well. We had a number of senior managers who worked together in West Africa during the Ebola crisis, so we were kind of somewhat prepared to deal with a virus that spreads fairly quickly, and we put in place protocols to distance people, test people, keep them as safe as possible, work people from home wherever possible, and really keep the business going, but also keep people as safe as possible. And it's a real fine line that we're dancing, in a sense, because our local communities, governments, etc., are relying a lot on the jobs, the revenues, etc., and also they're relying on us to keep them safe. And some people would prefer we just shut down and not operate. Others are kind of acting like you obviously see the leadership in both the U.S. and Brazil sort of, business should be as usual, keep working and operating and paying the bills, essentially. So we've been dancing the line between the two, and when governments have asked us to shut down, we've shut the mines down for, up to 3 months in Mexico and a couple of weeks in a couple other sites. And weathered the storm fairly well. We'll probably reset our guidance here with our Q2 results, and we'll reduce our Mexican guidance, because we were down for 3 months. But the rest of the mines have pretty much weathered the storm well. Supply chains have been extremely robust across the world. I've been really surprised about that, I have to admit. And steel balls coming from China have continued to come. Gold's been flown from Brazil to Switzerland without more than a day or two delay. We've seen stockpiles of cyanide. Fuel's fairly easy to get this current diesel price environment. And, it's actually performed fairly well on the ground. And the workforce, I think the challenging part here is there's certainly more protocols and things to keep them focused on keeping safe and healthy that I do worry about fatigue and health and safety. Shifts can be longer or rotations can be longer. So it's something that I think we're having to adapt to as almost a new normal. And, I don't know if a vaccine's coming soon, but I think everyone's trying to adapt to the next year or two of operating in this kind of environment. So I think most of the mining universe has done a pretty good job of that so far. The next few slides I'll go through very quickly here. Slide 5, we've just gone from being a smaller $500 million company up to now, I guess we're in the range of $3.5 to $4 billion with lots of liquidity. So we've seen a lot of big institutional funds invest in the company, really changed the game for us. Page 6, the key point here really on this graph is we've become a much more institutionally owned company. Thing that I really love here is the right-hand side where, you know, almost 8.5%, 9% of us is owned by insiders. So Ross Beatty, myself, a few other board members and management team members own a lot of stock here. And I think it's really rare to see in the gold space when you have a company that produces 500,000 ounces or more, and you look at our peers there, and they're very, call it, lightly owned by management and founders and that, where, you know, Ross particularly obviously owns the bulk of that, and he's put in over $100 million over the last few years into the company. He said to me one day he had about $500 million available if he needed it to grow the company. And us ourselves have put in about $5-6 million, and I'm not a wealthy guy. I'm fairly young in my career, and you know, it's been a riskier investment in the early days when gold was 11-1200, and it felt a bit like it could go down. But obviously, we've seen a real reversal in that, and it's been a fantastic selling point, I think, for investors, where they see that we have skin in the game as management and the board. You know, we live and breathe and die by the performance of our company, not just the stock price, but how we actually perform in communities and deliver on our promises. So it's been a really good exercise and investment. Here's the growth profile I mentioned before. We've gone from kind of that one producing mine on the left there, which was Mesquite. We've added Aurizona last year when we put it into commercial production, and that was a challenging restart in Northeast Brazil, but it's operating well since then. And then our 2020 guidance obviously is that 500,000 to 600,000 ounce range. You know, roughly over the next 2 years, we have a chance to add at least 2 projects here, which is expanding our Mexican mine and adding the Castle Mountain mine, which will go into production here in the next few months. And then we'll rebuild the Santa Luz mine in Brazil and expand Castle Mountain to a larger scale. So a lot of growth in the portfolio, and I think it's pretty rare. I think it's about 20% per year in growth. So nice to see that internally funded. We don't have to acquire any assets to get there. And valuation, I know the crowd, I'm not really trying to necessarily sell the shares to you, but this is kind of the story here, where we're going from that smaller producing company of kind of 250,000 ounces a year towards the right, which is 750 to 1 million ounces a year. Valuations of companies this size tend to be in that $3 to $7-8 billion now. Even some of them are probably $10 billion when you look at the size of that bubble. And, you know, the Amanas, B2s, Northern Stars, Evolutions are, you know, between probably $7 and $10 billion each. And we're still trading that $3 to $4 billion range. So it's exciting for us. We kind of go, if we can execute on delivering our projects over the next 18 months, we will be delivering close to 1 million ounces a year. And we kind of go, the valuation should start to catch up. And that's been part of the thesis of putting these companies together, is that ultimately single asset companies are tough to manage when things go wrong, because you have no other assets to rely upon for cash flow or resilience. So the multi-asset portfolio tends to get a better valuation, and, you know, trading at least 1 times net asset value is the goal over the next period of time here. Guidance, this is a little bit old now. We'll reset this, but mostly it'll be Los Filos in Mexico. But as you can see, Los Filos produces about 200,000 ounces a year. It'll go to close to 400,000 when we expand it. Then we have a few mines in that sort of 75 to 125, 30,000 ounces a year, being Aurizona in Brazil, Mesquite in California, and then the next 3 are smaller mines in Brazil. And then Castle Mountain is small at this stage. It'll come on stream here and produce gold in probably early Q4. Now the projects, and I'll go through this. And again, I'm happy to stop for questions now, or if I go quickly, we can just ask them at the end. It might be easier for people.
Christian, I have 2 questions.
Yeah, sure.
First of all, how much of hedging do you guys do currently right now on the projects and on the production? If you guys do any of that hedging? And are you focused more on the organic growth or more of an acquisition side at the moment and in the near future?
Yeah. So in terms of hedging, the first question there, we have, I guess, our 2 critical backers are Ross Beatty and then Mubadala, which is the sovereign wealth fund of Abu Dhabi, and they have a $260 million convertible note, roughly a 15% pro forma equity ownership. But just going back to the hedging question, so our 2 core backers don't believe in hedging gold. We believe investors should be able to hedge it themselves. They want full exposure to gold. So we have basically a policy of not hedging gold. However, we did inherit, I'm going to say it's 200,000 ounces of gold that's hedged from the Leagold assets. So we do have those that run out in the mid-2022. So I think it's 10-12% of our production for the next year and a half, 2 years is basically hedged at around $1,400 gold. So obviously well out of the money today. Fortunately, it's a small piece of the portfolio. And then we are hedging a little bit of the Brazilian real right now. We're looking at diesel prices, and we're looking at the Mexican peso, and it's been an incredible period for gold mining companies where the gold price has gone to almost all-time highs. I think we have a chance of breaking it in the next few days if this keeps going. And then you've seen our diesel prices come off by about 30%, and our currencies in our local countries have come off between 15 and 30%. So you've seen this expanding of the margins from, you know, when it was 1,500 gold and diesel price was higher. Now you've got both of them going in good direction from our perspective. And I think Q2 and 3 could see some very interesting cash flows from the gold producers. And, you know, we're really pleased to be not hedged on too much of that right now. So we're keeping it fairly wide open. And I think hedging can be a mug's game where you're going to get it wrong quite often. And a lot of sophisticated investors can actually hedge those things themselves. So we tend to be fairly unhedged or naturally hedged. Where in your resource country, we see that the currency prices tend to act as a natural hedge. When the gold price is down, the currencies are weak quite often, although we're in that beautiful environment right now where it's the opposite, where we have strength in both. In terms of the second question, in terms of growth, we're really focused now that we've done a couple of acquisitions over the last few years on internal growth. So basically expanding Los Filos, which is this current slide, to double the capacity, rebuilding Castle Mountain, expanding Aurizona, and then also rebuilding Santa Luz. So from all those, we've got probably 300 to 400 million of capital to spend, probably 18 to 20, 24 months of real work internally. So we're probably not focused on external growth or M&A right now. But if something does come along and where we are opportunistic and something looks really exciting or a reasonable valuation, Ross is a very aggressively wants to build this into a good-sized gold mining company that can, in a way, in a funny sort of way, fill a bit of a void that Goldcorp's left here in Vancouver. I mean, we weren't doing it for that purpose, but we do get a lot of questions now about making donations, about people looking for work with mid-sized companies in Vancouver, and also Canadian champions. And we think that we can maybe fill some of that void. And we will need to add another asset or two along the way and continually look for, call it tier 1, maybe tier 2 assets that can fit the portfolio. And I think that's one of the growth strategies here, is to eventually sell or, dispose of one or two of the small assets and add a bigger asset or two that's higher quality. So if everyone's happy, I'll just run quickly through the assets and then maybe open it up to a few questions around the assets or the strategy as well at the end. Los Filos, I mentioned, it's a Goldcorp mine. They, I think, put it in production around 2008 or 9. It did produce more gold originally. I think it got a little bit small for them, and Leogold was nimble enough to buy it. They financed it all externally, and they've really done a wonderful job of taking this from about a 1.7 million ounce reserve to 4.5 million ounces in a couple of years. And there's still another 6 million ounces in resource there in M&I. And what we really love about it is we're actually building a plan right now to take the plant from, to build a CIL plant. It's currently a big heap leach operation. And it's getting some grades from underground now are in that 4 or 5 plus gram range, and putting that on a heap leach pad and recovering 65-70% is really not the smartest way to actually recover the gold. So we're going to build a CIL plant. The plan is to basically announce that in the second half of this year. We're doing a study right now to get the optimal sizing on that. With all the gold that's there, and we see all this upside, we think actually bigger it will be better in this case. And because our financing is strong right now, instead of the 4,000 ton per day plant, which was in the original feasibility study from a couple of years ago, I think we'll move to something more like 8,000 tons per day, going to 10,000 if we need to. And we're just looking for the right location. We're just doing all the mine scheduling and planning at the moment to make sure that obviously we can feed that size plant. And what we're seeing is with these higher gold prices and with a more efficient, larger plant, is we'll probably bring some of that resource into reserve in this process. So really exciting for me. You got a 10-year mine life at 350, maybe up to 400,000 ounces a year. Potential to add another 3 to 5 years fairly quickly here, and to get this plant into production over the next sort of 18 to 24 months for a fairly modest cost of probably $200 to $250 million. So this is probably the biggest bang for our buck for investment. For a small amount of capital, you're going to basically be adding 200,000 ounces of annual production. Slide 11 just probably articulates that. I had the picture up there, but I've explained most of this already. We'll have basically the two processes. We'll have the heap leach for the lower grade. We'll have the CIL for the higher grade. We'll feed a lot of the underground through the CIL plant, which is obviously more efficient, recovering 90%. And I think we'll reprocess some of that material that they've been leaving behind, or some of the gold they're leaving behind in the leach pad, through the CIL plant eventually. So we'll have a lot of more flexibility here when we get this expanded in the next couple of years. And you can see on slide 12 here, there's multiple deposits, several undergrounds at good grades, but even the open pits. Guadalupe is the new open pit, which we're currently stripping and hope to have in production around year end. 1.4 gram open pit, some scale there will be a really nice addition to what we're currently putting on the leach pad at below a gram. And then you look at the Los Filos and Bermejal underground, you're looking at 5, 6, or up to 7 gram type material that will supplement that through the mill and will produce us a very high level of gold. 400,000 ounces a year is a pretty decent mine. I'm not sure what number mine it'll be in Mexico, but I think it's in the top 3 maybe then in terms of gold production. So that'll be an exciting mine for us. And bringing that 6 million ounces, slowly converting that into reserve is a key part of our strategy as well, and starting to explore again. Turning to Brazil, this is the mine that I guess I first got involved with in this company. And I know George or the Sandstorm guys are very familiar with it, but this photos are actually a really good one where it shows a lot of the bare bones of the plant. When I first went down there, boy, I remember walking through this thing. It was rusty. It was ready to fall down. It's close to the ocean. You can almost see the ocean in the background. A lot of saltwater damage. And really this foreground where you can see the crushing circuit, the conveyor down to the new blue mills there, that's the area that we're really focused on. They were starting to get into harder transitional ore and some of the fresh rock. They had no crusher. They really didn't have the money to put that into place, even though they'd started the expansion. But that was when the gold price was falling in 2012, 13, 14. And so basically it got shut down, put on care and maintenance. We inherited it and basically reinstalled this for give or take $150 million. Brand new crusher, brand new mills. And we refurbished the back end of the plant. You can see there, tailings dam exists, which you can see in the background. And we got back to mining in the main pit, which is called Piaba. So for a modest amount of capital, we were able to put it back into production. It's been producing very nicely for the last few quarters. It produces about 120,000 ounces at the moment, million ounce reserve. We replaced the first 6 months already. And what we really love here, and I have to admit, Ross is the right guy to talk about this. And if he were sitting there, he'd say this should be a 250, 300,000 ounce producer. There's so much underground potential and open pit potential around this property. There's 1,100 square kilometers, and it hasn't been fully explored. And there's lots of targets on this property that are near mine. We've got some fantastic drill results that we're following up on, and we've also got the underground deposit. And Ross really loves the underground because it's really competent, hard rock that is really amenable to bulk underground mining. So we see that potentially, give or take, a third of the overall 8,000 tons per day could be fed from underground at double the grade we're currently putting through, which is about 1.5 grams. And then you supplement it with some more open pit feed. So it's got a shortish life at about 7 years right now. So we've got lots of work to do in the interim to actually develop and expand it. But the bare bones of the project are working well now. And now we're focused on exploration. This gives you a zoom in on the actual mining permit. All of the deposit really sits currently in Piaba there, but you can see all the gold and soil anomalies in pink. They've been mining here, the artisanals, since the 1650s when the Jesuits were here. There is gold everywhere. They're still finding nuggets of 4 to 30 kilograms here at surface. And in Brazil, it's quite different than what I experienced in West Africa, where they come in, they actually use a backhoe, take out about 5 meters of laterite. They use metal detectors, and they find these nuggets. And I've got pictures sitting on my desk of nuggets that are the size of my head. It's absolutely incredible. They should actually be in the Smithsonian, but they actually machete them up, divvy them out to the local garimperos, as they call them, but artisanal miners, and sell them off for, I assume, something below the current gold price. And we end up buying the land from them. We have the underground sort of mining rights or exploration rights, and we buy the land and we go and mine it. And that's basically, you can see a nice trend here. It basically continued along for 4 kilometers for our current pit, and probably another 3 to 5 kilometers along to the east or the west. And then there's step out trends from there. And then 15 to 20 kilometers away, we have other targets that we're looking at that have similar scale and footprint. But there's a lot of gold around this region, and we're pretty excited about the future here.
Christian, I have a question.
Yep.
Do you guys have a lot in Brazil? Do you guys have any issues with garimpeiros, or is it sort of like are you guys handling it locally through through community engagements, or how do you guys handle that?
Yeah. It's been interesting. I mean, this area is a very, call it subsistent farming and fishing region right on the coast in the northeast, quite poor. We're the only mine in the whole state. So it's different than other parts of Brazil that are, I call it, more established mining regions. What we find is a lot of the garimpeiros are landowners. They're locals that are landowners. And we found it actually has worked fairly well because they tend to mine their own land or their neighbor's land with them. And they tend to go for the high-grade gold. They make money from that. But then they seem to be generally willing to sell it to us. And a few of them have actually sold to us and then invested in bus companies or in a fuel station that supplies us in that. So there's almost like they'll go and do the surface mining. They identify quite often these trends. We'll go in and do the deeper stuff that they can't make money doing. And there don't seem to be many garimpeiros coming from other regions of Brazil or other countries. And we find that, certainly in West Africa, I found, when they come from other regions, they don't care about you because it's not their land. Where here, they actually are protective of their own land. If they're going to sell it, it's a negotiated deal, and they're usually happy with the result. So we find that it's almost a peaceful coexistence where we'll mine our area, it's fenced and gated off, and they don't come in unless they're looking for animals to shoot for food or something. But they generally just leave us alone in our own land. And then when we buy the land off them, we'll fence it off, and they tend to go and move on to a new area or move to the city or buy a new piece of land, or we help them find a new piece of land. So I've been amazingly surprised by how peaceful the coexistence is. Yeah, they all want jobs. They all want to work at the mine. And so you do have a tension there with the local communities of trying to supply enough jobs, which you can never do. And you want to have as much community support as possible. And I think we've found a nice balance so far, but you're always on the edge because you can never supply everyone with a job and income. But overall, the garimpeiros, I'd say, have been reasonable to work with so far.
So any, do you guys, speaking of the employees, do you hire many expats, or is it like, is you've been successful more on the hiring the local technical and labor? I
mean, our goal is always to be as close to 100% as possible local and as close to 100% as possible from in-country. So in this case, I think we're 75% or so local. We're close to 98 or 99% Brazilian. What we tend to find, particularly in these poor rural regions, we need to train people up in that. So the senior supervisors, managers tend to come from somewhere else in Brazil because they're already miners. They have the skills. They'll come in, they start training people, or the mining contractor, et cetera, trains people to drive trucks, et cetera. And we do have, at the moment, I think 2 expats when we were starting up the mine. One of them speaks Portuguese, has lived in country for years kind of thing, so quasi-expat. Eventually, we hope to actually turn that over to Brazilian leadership and really Brazilianize the whole thing, because it's amazing in Brazil. There's a lot of technical skills there. I've also been amazed by the number of women in mining in Brazil. I think the high proportion of very skilled women here. And when I walked around the site, I remember one of our first English translator, I think she's a civil engineer, maybe it was processing engineer, I can't remember, from one of the local cities. She actually now is working in our processing department, but it was her way into the business because there's nothing else in mining in the region. Now she's actually doing what she wants to do. But we see a lot of that kind of progression where people kind of get into the industry here and progress.
Any issues with Brazil and their tax regime?
The two areas in Brazil that are challenging are the tax regime and the bureaucracy. I would say corruption is something that used to come up more, but I really think they've cracked down on politicians, and when they put a bunch of families in jail and a lot of politicians in jail about 3-4 years ago, I think it's really cracked down on things and been a very positive environment since then. But what we do see is you've got to have a certain infrastructure to manage your taxes and bureaucracy. Permitting could be very slow. It could be arduous. You need to permit everything. The environmental agencies are very strict right now because of the tailings dam failures they had. So obviously we're looking at things like dry stack tails and filtered tails for our future projects. Can we transition to those? Because obviously it's more palatable. So it takes a long time to go through permitting. We find the regime there also, when they sign off on a permit, they take personal liability as well as sort of government liability. So they're very slow to permit. And then on the tax side, I have to admit, it's one of the lower tax jurisdictions I've worked in, but it's one of the more complex ones. So you actually spend a lot of money on complying and putting people in place to keep you out of trouble in taxes. But the actual rate in the northeast of Brazil, I think we're paying 16% corporate tax because there's a rebate for actually investing in a poor part of the country. And the royalties, I think, are 1.5%, and they own 0% of your project. Where in West Africa, quite often they own 20 to 30% of your project, have 5 or 6% royalty, and it's a very different economic environment. Excellent. So it's been okay, but you do have to have the infrastructure in place.
Thank you. I'll let you continue.
Slide number 16, just quickly, it's our underground project. We just put out the study a few months ago. On top of our 1 million ounces, you got another 3/4 million ounces. 2.8 grams instead of 1.1, 1.4, 1.5. We've already got the plant in place. We need to spend about 70 million capital. This is a PEA, so we'll take it through PFS next, do some more drilling. Hopefully we'll have that out next year in terms of a higher quality study. But we really do see this as part of the key to our future. Then you reverse and you look to California, and again, a very different picture here. This is a reclaimed mine, Castle Mountain. It produced about 1 million ounces in the 1990s, shut down when gold hit 250. Viceroy was a great operator. They still have the existing permits, which a lot of people ask me, how can you mine in California? Well, ideally you want to be a brownfield site or a currently existing permitted site, and that's what we are here. They reclaimed this beautifully. This is a wonderful site to show people. The leach pad's in the background there. It has cactus and Joshua tree growing on it. You have the mountain sheep came back and love these sort of old pit walls. And we've gone back in there, rebuilt the leach pad, and we're going to start mining. Well, we've actually started mining already. We'll start processing in the next, I'm going to call it weeks now. And, I think we're going to be a great story for California to say, hey, this is a backfilled pit. We're able to reclaim it. We're actually going to mine again, and we'll be able to put it back in its natural state one day again. So I think these are great stories because I think it brings jobs to a poorer part of the U.S., which this is all desert around here. We're doing everything. We're not using any tailings dams, so we're also being a little more environmentally sensitive here. And obviously we're meeting certain emission standards and that. So it's been a really important project to show that you can mine in California, I think, again.
How long did it take for you guys to get it permitted? And also one question from one of the audience is approximately annual production was about 700K. Now we are slightly estimated to be 570K or so. Is that 120, 130K? Is it because of the COVID or is it because of the operational challenges and such? So 2 questions sort of coming up.
So let me take the first one. I may need a bit more clarification. The second one, the first one, I've just turned to slide 18 there. It was already a permanent site. So it had the EIS that was in place from the 1980s and 90s. It had an area disturbance. A lot of it's on patented land. So we were able to actually go in there and just basically almost restart rebuilding the mine. We needed a couple of construction permits. We got them fairly quickly. We needed to get our water discharge permit, which we just got a few weeks ago. And it probably took us 1.5 years, 2 years to, I'd call it amend or just update the permits, but we had the base permits in place, so it was a lot easier than starting from greenfield. The next phase, as you can see, it's a small phase 1 at about 50,000 ounces, small CapEx. Phase 2 will be 200,000 and more CapEx because it's similar to Los Filos. You have a big heap leach operation, and you're going to build a CIL plant as well. And that'll take us a couple of years to build, but I think the key part to that is it'll probably take us, give or take 2 to 3 years to permit or amend the permit to get that because we need a larger area disturbance within our EIS boundary. We probably need to update some studies and submit a new mine plan, etc. So we get phase 1 in production in the next few weeks here. Kevin Scott's working on the updated study, which will be done in the next few months. Then you submit your permit amendment once you're in operation. So you show we're a good corporate citizen, we're operating within our boundaries and our permits, and we just want to amend what we already have built. So a slightly easier process to amend than start greenfield. And I really do emphasize that, in certain areas, it's way easier to start. And when I look at projects in California, if it's a greenfield site versus a brownfield or an existing permit, it has a very different risk profile and time profile to me. So this one, I think, has got minimized risk. It still will take us 2 or 3 years to amend those permits, though. And sorry, the second part of that question, sure, was I missed it was more complex.
Is, there has been a slight reduction in the ounces for 2020, estimate of 700K to 570K ounces.
Oh, okay, you're talking about overall guidance. Okay, I get it. Yeah. So let me just explain that. So for the full year of 2020, if you added the full year of the Leagold assets, we would have had guidance. I think it was around 680 or 615 to 680. But we acquired them on March 10th, so we can't include the production pre-March 10th. So we almost lose a whole quarter of production from 4 operating mines. So you take out give or take 100, 150,000 ounces from that. So you're close to 700. You take out 100, 150, get down to that sort of mid 500s or so range. We will probably come down closer to the 500 range once we reset guidance, because we do have to take out a quarter for that lost production here during COVID in Mexico. So stay tuned for that at our quarter two results.
So quick comment here. We have about 15 minutes or so. So maybe
yep.
I'll take some of the questions afterwards. Maybe I'll let you just complete the slides and you just take the...
Yeah, you got me going here. So I've been sort of monopolizing the time. So very quickly in the last couple. Santa Luz, again, I guess for engineers too, a fun rebuild. I like this one better because Yamana built it. It's in a drier part of Brazil in Bahia. It doesn't have the saltwater corrosion. We're going to change this from a CIL plant to a resin and leach. It has a bit of carbonaceous ore. You can always go back and question why did they not build the resin and leach plant to start, but you know, all the test work and the pilot plant, et cetera, has been done since then, and you know, all the consultants have indicated, you know, resin and leach is the way to go. So we're going to rebuild this. We should start that. Well, we actually kind of started it already, but it should be done by around the end of 2021, and that'll produce about 120,000 ounces a year, sometimes 100,000. For modest capex of below 100 million, again using a lot of the infrastructure. Similar to Aurizona, underground and open pit potential exploration expansion. We'll start drilling there again probably next year or the year after. And this is almost the last slide, but we spend less time on these. But Mesquite's a past producing mine that has been going on and off for 30 years, still producing good gold. At these gold prices, it's still producing lots of cash. We bought it for $150 million. We're exploring at the moment. We're finding old waste dumps are actually reserve grade, so we're just stacking those again and making lots of money from that right now. It's producing gold for less than $1,000 an ounce, and you know, we hope to see that going for a number of years. We've got the benefits here. It's only 4 hours from Castle, so we'll be trucking loaded carbon down to this plant. We'll actually be smelting all the gold for our two California mines at Mesquite and sending it to the refiners. So we got some benefits there from synergies. Fazenda and RDM, similar size in Brazil to each other. They're about 75,000 ounces a year. These are partial year guidance numbers, and both, you know, probably below $1,000 all in cost right now. Need some exploration and attention, but they're nice little steady state producers at the moment. And Pilar is the smallest one at below 50,000 ounces. We'll probably end up selling that. It's a little higher cost. It's got a reasonable number of ounces there, but it'll take some work and time, and really management should focus on the larger assets. And then when you look at ESG, I won't really stop on this slide. It's become such a hot topic for us as a mid-sized company now that we need to spend more time and effort communicating that to the markets. And this year will be a big year for us getting ESG reporting up to scratch, getting our rating, getting a bunch of communication documents ready for the market. And our 2020 catalyst is where I'll stop, but we've kind of gone through that. Lots of internal growth, operations, development projects on the go. Exploration is starting to come back on the forefront, and we've done a bunch of corporate things, but still some work to be done to really get to that optimal level of production over the next 18 to 20 months or so. So maybe I'll pause there and leave it open for some questions now.
Thanks, Christian. Really lots of really condensed presentation. Fantastic. Super, you know, yeah. So a few questions. Has there been any plans for Equinox to acquire any assets in Canada? If there is, what are the potential you know, requirements for such a property or such an asset? Is it like need very in greenfield or sort of brownfield assets that you guys are?
Yeah, I mean, for M&A strategy, we've really been focused on Americas. So that map that you saw earlier, other than places like Venezuela and certain parts of Argentina, et cetera, where it's really hard to do business, we're focused on the Americas. Love to have a Canadian asset. I do find that the valuations of single assets in Canada tend to be very high, and I have to admit my view on political risk around the world is much different than a lot of other people's. I don't believe anywhere is free of political risk or permitting risk or First Nations negotiating risk, etc. So I think Canada just has risk in different ways, and I think the valuations are quite high. Love to have an asset here, but I think you're going to pay up for it. And you've seen those asset values very high in the last few years, where I think you can get better value in other places, maybe even the US, but certainly in South and Central America. So it's just something that we toss up and turn and look at periodically. We've been looking at producing assets of 150,000 ounces or so or greater, but I think we'll turn our attention to some development projects along the way. Not likely greenfield, more like things that are moving towards being able to be developed and built, that's where I think we can add some value. We can actually raise the capital. We can put the engineers to work. We can provide a team. We can provide some track record and experience in certain jurisdictions. And I think we'll focus more on that kind of asset. But so I think slowly we'll start looking more and more at those development projects here.
One more question is, how have you guys managed the board governance and site visits during this whole COVID times, or other times that are really hard to access the sites, etc., etc.?
So with the very first part, I missed that.
How have you managed the board governance in site visits with COVID?
Board governance. Well, I tell you, there's been very little travel. I was shocked when I looked at my G&A budget for the last month. It was zero from travel effectively. We're just not traveling to sites yet. So in a sense, we're protecting that way, but we do have obviously people in country that do still travel to site and home and that. And unless we shut down, we won't be able to avoid that completely. But what we have been able to do is we've actually implemented a very rigorous testing regime. We actually, interestingly, General Wesley Clark, who commanded the forces in, I think it was Kosovo or whatever, is on our board. He's very well connected, obviously, in the U.S. to the military, but also to groups that supply services into large government organizations. And he put us in touch with a testing organization in central U.S. that actually is helping us put in place labs and a testing regime at our sites in the U.S. and we'll roll it out elsewhere. But we're putting in place the most effective testing you can get, which is the PCR test. And we'll be able to get results within hours to maximum 24 hours. So we'll probably do rotating testing at sites for all of our employees over time, particularly people who are at high risk and people who are coming in from outside, being contractors or others, which will help minimize, I think, that risk. We'll limit the travel. We'll also look at people who are rotating to remote sites and saying those rotations will probably end up being longer. So they'll go in for a bit, they'll get tested, and then go to work if they're negative. If they're positive, they have to quarantine or go home. Yeah. And if they're there for longer, obviously they're more isolated. So you just have to modify those working regimes in a sense. Yeah. You cannot eliminate all the risk. And I think almost every company in the world has to live with COVID for the next year or two unless a vaccine comes. And you're either going to shut down or you're going to find a way to operate and keep people as safe as possible. But we've had a number of cases, I'm going to say well over 100 cases we've found through the testing. Not one single individual had any symptoms of COVID. Nothing. Wow. And we've had I think we had one, maybe two people have actually even gone to a hospital. Because actually, we're finding our workforce, generally it's young, and people who get it don't know they have it. It doesn't even manifest itself like a cold or with any kind of symptoms. And unless we had tested, they probably would have had it for a few weeks, gotten better, and just continued on with life. But obviously, we don't want them spreading it to other people who are maybe more vulnerable. So it's been a really interesting exercise in that actually we're finding the virus isn't having as much an impact on people when they do have it. And it seems to be spreading through young people fairly quickly and disappearing from that group. But I think we're all going to have to find a way to live with it for a year or two.
No, that's great. Do you guys find more need to do more streaming? You guys
streaming? Is that like building streams with water, or are you talking about actually selling my gold to Sandstorm? George is like all over it. It's interesting. I have varying views on streaming. I think it's a type of financing that suits certain companies, situations, and that. If you have access, obviously, to call it cheap bank capital, equity is never cheap, I don't think, but cheap bank capital, or you get to a scale where you have a group like a Mubadala, who's a sovereign wealth fund, or you have like the Scotiabanks, BMOs of this world lending you money at LIBOR plus 2 or 3%. Those will be your, call it simplest and easiest, most flexible forms of capital in a certain way. But I have to admit, I've worked with Sandstorm and Franco-Nevada on Aurizona, True Gold, now Castle Mountain. I'm sure there's one or two others. And in a way, there are some benefits to that too. And there's a flexibility to that capital. They can ride through storms and they don't want to repossess your asset. All they want you to do is get it in production. So they're actually sitting alongside you, trying to help manage it, find solutions, rather than saying, I'll take that asset from you, like a lender could do. Yeah. But I do think you pay a price for it. And people calculate the cost of capital differently. And for a stream, it depends on what gold price you use. And obviously, we as gold miners believe the gold price is probably going up over time. So to calculate it at spot gold price as your cost of capital is quite a difficult exercise. I believe you need to also sensitize it for higher gold prices and lower gold prices, which means your cost of capital can go down. So it has that flexibility, and I found it, I mean, when I was in West Africa at True Gold, and less Sandstorm and Franco were there, I think the lenders would have repossessed that project and it probably wouldn't be built right now, to be honest. So they can be a really good partner, and particularly in certain circumstances, but I think the cost of capital, in my view, if you're a bull in gold, can be higher at certain stages. And if you have access to cheaper capital through the lenders and that, maybe you need that capital for a company of our stage. So we probably are not likely to be users of streams at the moment. We do have a number of them on our assets. Aurizona, I think Sandstorm has a pretty good one there, 3% royalty that's scalable. And we have a Franco-Nevada one, I think, on Castle Mountain at the moment.
Excellent. Now, what do you think of the future price of silver?
I mean, maybe I'll just open it up to, because I think someone's likely to ask, but the price of gold and silver, I mean, I actually thought we'd be in that $1,300 to $1,500 gold range right now. We were planning at $1,400 until, well, in December, our budgets were done at $1,400. We were buying gold assets at $1,100, $1,200, $1,300 gold, hoping it would go to $1,400, $1,500 in the next few years. I always did believe over the next 3 to 5 years, gold would be probably pushing towards its highs, just because of all the money printing and government abuse of their balance sheets and interest rates being zero. Like, would you rather own a negative yielding Swiss bond or rather own a bar of gold, which is actually a tangible asset right now? I know which one I would buy. And so I always felt that over the next 3 to 5 years, gold would go up. I thought it would probably touch our all-time highs. Couldn't believe it. We're actually almost there today. And silver, I just see as kind of supercharged gold in many ways, where it tends to be more volatile in the upside and downside. It sometimes gets classified as that industrial metal, which I think it was being held back partly because of that over the last 6, 12 months, but it seems to have caught up very, very much so in the last few weeks here. And I see silver as kind of outperforming. You look at Pan Am's stock price, I think they're at all-time highs right now. I think they're over $50, and silver price is only $23. I don't think they were this high when silver was $50 a few years back there. So I see gold as maybe going up from here a bit more. I do see it as potentially being in that $2,000 to $3,000 range at some point. And I think silver just will do better in a sense. It tends to go further.
And do you guys have I don't see that much asset in silver. Do you guys have silver as byproduct? Do you guys would like to have silver assets, mainly silver?
We have very little. Yeah, we have almost none. I think it may pay for part of the refining costs in a couple of our mines. We're almost pure gold. It's very straightforward. All doré, no concentrates right now. So pretty simple. And we're not looking for silver assets. And part of the reason is Ross has 3 core holdings. He has Pan Am Silver, which he created over 25 years. He has Equinox Gold, it's been 3 years. And we don't want to be competing for assets, really. So they'll buy silver assets. We tend to focus on gold. Of course, they have a little bit of gold. It's hard to be a pure silver company nowadays. There's not many assets out there. Yeah. So we'll focus on gold. And he has a clean energy company called Intergex. The interesting thing was Ross has real conviction on gold. And I think he said, in his view, we were in the 4th inning of 9, as a baseball analogy for the gold price. I think last time I heard him, he said, actually, I think we're in inning 3. COVID has actually made gold more attractive in a sense. And his view is we're in inning 3 right now. So there's still a ways to run here. And I still believe consolidating companies and assets is actually the way to go. And I think we've had real applaud from the market, and the big funds in New York have been very happy to see assets be coming together, cutting corporate costs, becoming more efficient. And I think the interesting thing now is going to be growth again. And how do you find more assets? How do you find people, which is probably relevant to this crowd? I think there's an underinvestment and a lack of interest in becoming a mining engineer, becoming a geologist, becoming someone in the mining industry. I think there's been a gap over the last 8 years. It's not been sexy to join mining. Everyone's going into cannabis, technology, biotech, other companies. You're making quick money, options, cashing out. Well, it's a very different, cryptocurrencies as well. And I think it's a very different world today where most of those sectors are out of favor. I think technology is doing all right still, but the other ones aren't doing that well right now. And I think you're starting to see some of that speculative money and interest come back. And I hope you'll see some young students come out of UBC and other universities with mining degrees, because I believe one of the challenges for the mining sector, and it hasn't hit us yet, is inflation. I believe inflation will come in a few years. Right now we're in a wonderful time where actually costs are going down and gold's going up, but usually as gold goes up over the long term, inflation picks up, and that'll be people costs because there aren't enough good qualified engineers who are 30, 40 years old who have experience. We just replaced our COO. It was a natural transition. Atty was 65 and retiring. We had 3 good internal candidates. Doug Reddy ended up getting the role and taking it on, which was great. But when we looked around the market, there aren't a wide group of people who are mining engineers, geologists, experienced technical people who are certainly in their 30s, but in their 40s and early 50s who have got lots of experience, because I think there's been a gap of interest in our sector for a number of years. And to be honest, there haven't been a lot of jobs.
Yeah. Well, that's really interesting to hear, and really thank you, and insightful for all the information you presented. Definitely a role model for myself at least. And I've seen this company just grow from basically the market cap and the projects and everything. So I really am amazed by the growth and the solid growth of this company. So I'm a big fan myself. And
I appreciate it. Thank you.
So Shervin, we might wrap it up because we're just about out of time. So I'd just like to, on behalf of the branch, say thanks, Christian, very much for your presentation, taking us through that journey, the journey with Ross Beatty, and building really what is a significant new and emerging gold company, and as you said, potentially a new Canadian champion. Thank you for the compare and contrast of the different countries that you're operating in. And also, really would like to thank you for both what you shared on COVID, as well as the industry and education, and the need for the progression of young professionals through the industry. That's certainly something that's dear to the heart of the branch. And I'll just say a couple of words for the branch. As you all know, we have Student Night as our big event. We're still trying to figure out what is Student Night going to look like this year. But support for students is core of the CIM branch. Just like to also, again, recognise our sponsors, Bedrock Service, AMC Consultants, Merit, Pan American Silver, and SLR. And if anyone is on the call would like to sponsor the branch or be involved in future webinars, please let us know. But again, to wrap up, thank you very much, Christian. Good luck with everything that you're doing. Sounds like you're on a great track for growth, and we all wish you much success. And also to hear about the learnings that you're getting of this COVID world we're living in.
Yeah, no, thanks very much for the invitation. It's always fun, and hopefully next time it's in person.
Absolutely, that would be great. And please keep an eye out on the LinkedIn site for future events. The branch is working on potential speakers over the coming months. It is a bit of a lull season for summer, but we do hope to have another presentation sometime in the coming months. Okay, we might just close it off there. Thank you very much. Thanks, Shervin, for moderating the questions, and we wish you all a great day and a great weekend.
Thank you very much, everybody. Thank you, Chris.
Thanks, everyone. Bye now.
Thank you.
I appreciate it.
Thank you. Stay safe.